Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Syed Hussain. He is the CEO of Liquidity Digital, and we are going to talk about ecosystems and creating new assets. Syed, it's great to have you with us.
Thank you, Jill.
At Market Site. One of my favorite topics, creating new ecosystems to help serve the underserved.
So yeah, I mean, with Liquidity, what we're doing is we're building an end-to-end platform that's going to enable three components. It's the taking issuers, finding quality issuers, putting them onto the platform, and then marrying those through the right distribution channels and bringing them to qualified investors.
Mm-hmm. All right, and this kind of capital can be used for underserved markets.
That's correct, yes. So I think one of the problems that within these underserved markets that they have is within their traditional routes, they don't have an avenue to gain access to the kinds of issuances that they would like to. And with the blockchain, with one of the things that you can do is you can enable that. And if you're able to do that within a regulatory compliant framework, you're able to solve for all kinds of problems across the board.
Yeah, and so digital securities, I mean, with how they're functioning on the blockchain, it's really, what's right, we're transitioning how traditional capital formation is being created.
Absolutely, absolutely. So what it's doing is there's the right way to do it and there's the wrong way to do it. I think we all saw the wrong way to do it when with the whole ICO craze that happened. The reality was that a lot of these things were even though they were labeled as utility tokens per se, they were really done under the guise of utility tokens, where in fact what they were security tokens. And anytime you're bringing these to the markets, you need to ensure that they're being done in a regulatory compliant framework. The beauty of putting it onto the blockchain, what that does is you're able to encapsulate that inside of a smart contract. And within the smart contract, what you can assure is that it only goes through the appropriate KYC process, the appropriate AML process, and only those who should be looking at these or should have access to these are the ones that have access to them.
Yeah, because it seems like a big topic is always how do you ensure security? And
so with security, there's different elements of security. If we're talking about security from a technology perspective, one of the issues becomes that when you're able to encapsulate these digital securities inside of a private blockchain versus putting them onto a public blockchain. And when you put them inside of a private blockchain, even if your key it ends up getting lost, you can reissue that security almost instantly. And that way, one of the primary concerns that people have about your private key getting lost, that gets alleviated as well.
All right, let's talk about the industry overall. I think 2019 has been somewhat encouraging that we're starting to see a lot of these practical theories be put into practice.
I agree. I mean, so we launched Liquidity in the beginning of 2019, and that was dead smack in the middle of the crypto winter. And a lot of people have come up to me and they ask me, they say, "Are you out of your mind? Why would you launch this new company during the midst of the crypto winter?" And my response to them is, look, yes, this is the crypto winter, but for us, the way that we're seeing is that even though this could be the crypto winter, for us, this is really a digital security spring.
Right.
And for 2019, we're very, very optimistic about where this whole space is going to go. So in 2016, there was this thing started to just come up. People started hearing about. 2017 was when the bubble started to form. 2018 was the pop of the bubble. And now in 2019, what you have is you have the remnants that are remaining. The infrastructure has been laid, which allows for quality to actually start to come in. So I think in 2019, we're really going to start to see more and more quality enter the space.
Yeah, markets, particularly digital asset markets, have a way of Darwinism kind of finding itself through and kind of weeding out the outliers there. Next week, we have Blockchain Week in New York City. Consensus will be packed as always. I'm covering the Digital Asset Summit. What are some of the themes that you think we're going to get out of Blockchain Week?
I think you're going to hear a lot about regulation. I think you're going to start to hear a lot about compliance. I think you're going to start to hear a lot about actual custody. How do you and I think 2019, what you're going to start to also see is the actual institutions, and we're already starting to see this with some of the folks who are reaching out to us. It's going to be incredible as to how many institutions are actually going to be involved in this space.
Yep, I've even noticed throughout my coverage you're starting to hear more about institutional adoption. I think that's really encouraging.
I agree, and you know, for us, that's one piece that we purposefully have separated out from is right now. I think the focus needs to be on the institutional side. I think the problem in the space has been that we've sort of put the cart before the horse, where everyone started to focus on the retail side first, and it's turning around. So now in 2019, what we're going to start to see is we're going to start to see the institutions, because you're not going to have true adoption within the capital markets without the institutions coming in.
Right. All right. Thank you so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.